Hey everybody, welcome back to the channel. My name is Nate Gritzmacher, aka Nate Lens. If you are new here, I cover all things mortgages and real estate, and in this video we are going to be talking about something that people always have questions on, whether it be in the process of getting a mortgage or long after they've closed their mortgage, and that is the impound accounts. Diving right in, an impound account is simply a separate account your loan servicer has set aside for your property taxes and insurance. So every month you make a payment to your loan servicer in the form of principal, interest, taxes, and insurance. The principal and interest obviously going towards the mortgage itself, and then the property taxes and insurance getting put into that impound account. And your loan servicer will pay those items for you when they come due. The obvious benefit here is that you have a little bit of peace of mind and you do not have to worry about paying those on time and keeping track of when they're due. Your loan servicer will pay these for you. The only exception to that is going to be your supplemental tax bill. In the first year that you purchase, your county assessor has two valuations on the home. They have the one from the previous owner, and then they have the new one at which you bought it at. So there's going to be two different property tax amounts due, and the difference in the two is going to have to be covered in the form of a supplemental bill. So it's important to keep an eye on your mail or just continually check the county assessor's website to see if they've issued that supplemental bill yet. In all the years following that, your loan servicer will be paying the full amount for you. Now, you may be wondering why in most cases a lender would require an impound account, and it really all boils down to risk mitigation. They love being able to ensure that the property taxes and insurance are getting paid, as to avoid any liens placed on the property by the county, and just to make sure that the property is always insured in the event that something were to happen to it. It protects the lender and it protects you. Now let's dive into what I think to be the most important thing to consider with impound accounts, and that is the escrow analysis process. This is done every year or sometimes when servicing changes to a different loan servicer, just to make sure that you are paying the correct amount in each month and that the balance is sufficient for any upcoming payments that are due. Now, I say this is the most important thing because at the end of the day, we are ultimately responsible as property owners for the payment of the insurance and property tax amounts. And we just need to be aware of how much those are going to be. Far too often, I don't know how they get this wrong, but loan servicers can severely undercollect when they do their escrow analysis. I don't know how they get this so wrong sometimes, but I actually just had a client and friend reach out letting me know that the loan servicer was decreasing his monthly payment on his escrow account by $400. Had we not looked at this, he would have been caught with a major surprise later when they did their next analysis and realized that they significantly undercollected by $400 a month. And they'll do one of two things. They'll ask you to pay a lump sum to cover that difference, or they'll ask you to significantly overpay for a period of time to make up for that difference. And obviously this comes as a huge surprise if it's not something you expected. So that's why I say it's important to think about this and to be on top of knowing how much you owe each year in your property taxes and insurance. You can do that just by contacting your insurance provider, finding out what your annual premium is, and then going to your county assessor's website and finding out what your total annual property taxes are. Divide that by 12, and that should roughly be the number that they're collecting for you each month. If it's significantly over or significantly under that, you need to reach out to your loan servicer to make sure that they adjust for that. So to wrap it up, an impound account is an easy way to make sure that those expenses are getting paid each month. All you have to do is pay your loan servicer and they take care of the rest for you. But like I said, it's important to be aware of what's due every year and to make sure that that loan servicer is actually collecting the appropriate amount of money. So if you found this video helpful, please like and subscribe, hit that notification button so you don't miss any great content and information. And if you have any questions or topics you'd like for me to cover, leave a comment below and I will see you in the next video.